Joining us now, Lenore Hawkins of Tematica Research. I'll get it right. Don't worry, Lenore. I'll get it right.
You've got it.
There you go. I think that we are ignoring some very positive signs in the economy, as I went through the list at the top of the hour. What say you?
There are some positive signs, but unfortunately, a lot of those positive signs are also the things that we tend to see at the top. One of the things that I've been looking at is that credit has been rolling over, meaning that people are looking for loans less, that businesses are looking for loans less. And if things were oh so great and if companies were oh so excited, why is it that we're seeing companies looking to borrow less and we're seeing them increase their dividend payout? That's not consistent with them reinvesting in their own businesses.
Are you pouring cold water on the idea that strong profits are present for buying houses, very strong starting salaries for graduates, all that pales into insignificance compared to the lack of loan demand from banks and individuals?
I think you have to look at all of the data points. And when everything looks super, super rosy, at times, if you're looking at just wage growth, that tends to be the best right when things start to turn around. So you have to look at more than a few data points.
Are you negative on the future of this economy?
I think this recovery is very long in the tooth. I think that we've never in history had a new president come in after a two-term president and not seen a recession within the next 12 months. I think a lot of the indicators in the U.S. are showing actually signs of slowing instead of accelerating. Okay.
Well, you got your point of view, and I'm glad you shared it with us. Now, moving on. How about retail ice age? You know, that's a story which we follow very strongly. I'm going to give you two companies right now, JCPenney and Nordstrom. Their sales are actually down. Same-store sales down over the previous year. We had Bert Flickinger on the program earlier. He's the guy who coined the phrase retail ice age. We had him on earlier. Roll that soundbite, please.
Retail ice age, deep freeze, approaching Darwinian destruction. So there are going to be many more casualties filing for bankruptcy, liquidation, retail rationalization. Better retailers survive, then there'll be a retail renaissance.
I got a really shockingly great idea for him. Make some money. That's going to make it all go away. So go out and make some money and stop talking.
Okay, the guy in the cow jacket there, he was talking about Sears, where the chairman has said, oh, we've got too many customers, as the stock goes down and down and down and down and down. Lenore, what's your take on the bricks and mortar retail sector of our economy?
Well, the pain we're seeing in the brick-and-mortar retailer sits right at the intersection of two of our investing things at Tematica, the connected society and the cash-strapped consumer. The reality is that household income today is below where it was in 2000, and real wage growth since the financial crisis has been relatively non-existent. So families are really pinching their pennies, and it's a heck of a lot easier to compare prices by whipping out your smartphone or going online and looking than getting in the car, spending the money on gas to drive around and try to find the best deal.
Are there any group of stocks, like the big technology companies on our screens right now, some of them, that you would buy?
At these prices, I'm hesitant to hop into anything. I mean, we've got the S&P 500 right now is actually 2 standard deviations in the price-to-earnings ratio above where it normally is, which means that right now stocks are really priced high. And those high-flyer stocks, well, there's only 6 stocks that have accounted for about 40% of the year-to-date gains.
That's true. That is true. Well, Lenore, I hope you have a very good weekend. And
You
I hope
too.
your people who you manage money for are watching this program and listening to what you've had to say.
Thank you, Stuart. Have a great weekend.
And I hope you didn't miss the 10% rally since the election of Donald Trump. But that's just another story. Okay,
No, not at all. And I like your music.